went and came back. I went on Friday. We did the burial. Then immediately in the afternoon, late afternoon, I dropped back.
Yeah. So I was supposed to have a session on Saturday, but I was like, okay, yes, it's from traveling. Then I waited for a message yesterday because you already sent me the message and asked me what time I'm free, you know. So I was free the whole day, but it's
Uh,
okay. We can start.
okay, fine.
Uh, I don't know where we stopped last time. I don't remember really.
The other time, we opened the accounts. Eh?
We
I think that's
opened
what we did.
we opened the broker account
The X, the XNES and whatever. The XNES account at the Meta 5.
and the Meta 5, yes. But I think we finished that part.
Yes. Yes, the thing is, yes, I'll just remind you where we did.
So we're supposed to look at something today. That's how, okay.
Yeah, something new. Yeah.
All right. So
Let me just.
let me first stop sharing. I get a slide.
Okay.
Because before that, we are looking at something else. Then we had to first go and I show you. Have you been practicing any analysis?
Let me first check my. Yeah, I've been trying, but with the schedule, so
Yeah.
I didn't do much.
So we looked at trend lines. Uh,
Yes, you were on trend line.
Now trend lines are wide. I sent you the PDF.
Yeah, yeah, we were on trend line, and you say that it's wait, and we may take some time on it.
Yeah, but I remember I sent you some PDF with trend line strategies.
Yes, yes, there's a not. Eh?
Yeah, just so that you go through it because it's a very wide thing. But one thing I can say is it reaches a point and you start doing your own, you know?
Yes, yes,
Like
yes,
you
yes.
find something that works for you aside what you've read. Or you combine
Right.
a
Okay,
few statistics, then you combine them into a
yes,
strategy that works for you. You know, because you
yeah,
can't trade all styles of trading. You cannot. You may know something small in it, but you can't trade all of it. You get.
yeah,
So,
yeah.
we're going to look at demand and supply. We shall stabilize
Okay.
in. For trend lines, you have to keep practicing. Like,
Yeah, we'll
but
do the
come back.
practice.
We shall come back to them with time. You know,
Okay.
Samuel, I'll call you. I'm in a meeting. I'll call you. I'm in a meeting. But you can use that document I've sent you. Okay.
Okay.
So let me share my screen. We're going to look at demand and supply. Just a minute. Now, there are so many also forms of demand and supply, like there are strategies, but this is just the basic thing that you can combine with in the strategy. Now, of course, there are other ways how, anyway, we're going to first define it from the basics. Then after, we shall look at the strategies. Yeah.
Okay.
So let me, are you on Telegram?
Yes, I'm on Telegram.
I added you to the new group. I don't know if it was you I added.
Yes, 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 yes. Yeah, I've been seeing it.
Yeah, because
Been seeing, and even I've been there. at least liking it and showing some whatever signs.
You interacted with it.
Yeah,
And last week we had an amazing week, only that
yeah. Last week I think it was really great. But
mm,
that I've not yet started like
trade.
following or entering the trade,
Yeah. But with
following
time,
closely or entering the trade. Mm.
you don't have the conferences for entering a trade yet. I think we shall look at it
No,
next.
I have the confidence, but I have the confidence. Even
Mm,
I tried one, but
yeah,
I've not yet been trying. The GPP USD last week to me it was really really a very slippery trade.
yeah,
So I tried. I think is it GBP JPY? I tried one,
yeah.
and even the trade went on well, and I was really happy for that.
It's okay. We shall, but you have to keep. That's how we move. Like you have to just keep
Yes,
trying. But you can try also the demo. Last time I said you can try how to place them on a demo, and we shall be on demo like a
yes.
few months. Then we go
Yeah, the
to.
other one was the demo. Mm.
You tried it on the demo.
Yeah, I tried to the demo. Even I made a profit.
Yeah, that's really
You remember
good.
the demo we created of $100?
Yeah, I told you to get $100 because most people go for money
Yes,
they can't afford to deposit. But
yes.
$100 is
So
close.
it did. Mm. Yeah, because I remember I don't know whether you was I got it from the YouTube
Mm,
that you should always practice with the amount you are able to afford
yeah,
than just practicing with what is far, far, far away from the money you are able to afford trading.
exactly.
Because you cannot do practice with 10,000 or $100,000. Then
Mm,
in real life trading, you are trading with $100.
you cannot.
Yeah, it doesn't make sense. So you should practice with what you're able to trade with.
Mm. So I'm changing this setting so that I got the slide from very far. So I'm just trying to
Okay. Okay.
think it has come now. So we're going to look at demand and supply, and I hope you can see my screen.
Yeah, I can see your screen.
Okay. So this is one of the main concepts that move the financial markets, demand and supply.
Yes.
Um,
Yeah.
that is, it's definitions from economics and so many other related fields. But in the financial markets, it does a lot. I know you've attended the crypto classes. You know that when someone sells,
Yeah,
the,
yeah, yeah. Before we even go far, you have just reminded me. I've been sending you the what? The message. Do I have a what? A timetable? Because I know I'll forget a specific date. Because I know
Mm.
it always on Tuesday and I don't know the other days.
It's Monday and Wednesday. Then Saturday is for revision.
Monday?
It's Monday and Wednesday, like today, Monday.
Wow. Yeah,
Then
it is Monday, not Tuesday. It is
no,
Monday. Mm-hmm.
Monday, Wednesday, then Saturday is for revision. You get like
Okay.
revising what we looked at on,
Wednesday, then Saturday. Mm.
but it's best at 10
Saturday
Monday.
is revision, eh?
Yeah,
Mm?
Saturday. So um, let's go back. just to in crypto, you've seen a lot of demand and supply. When someone sells, the price what goes down. When someone buys, the price goes up. Now, this is not only the thing that moves the financial markets. There are other things, but it's one of them. It's the one that is always there, you know, apart from the wars and things like that. I still on, David? Hello?
Yes, please.
I think threw me off, I think.
Your network went off.
Yeah, it just dropped. I don't know why. I just saw when I'm disconnected and I was off.
Hmm.
So,
Yeah, because for me, I just saw you disappearing. Yeah.
yeah, I saw it reloading. So we're talking about demand and supply. And
Yes.
I said it's not the only thing that moves the financial markets. No, there are other things like monetary policies or government policies, central bank policies, geopolitical events like the wars we are seeing, Iran versus
Yes.
Israel, such things. But demand and supply,
Yes.
they are the daily things, like it's always there. It's always running through, you know? So
Yes.
in economics, demand refers to the willingness of a consumer to buy goods and services at a specific price, you know? If the
Yes.
price is low or if the price is high, what's their willingness to buy? That is what demand is. Are they willing to buy or are they not willing to buy? So in finance, they use it to identify consumer needs of goods and services and their willingness to buy them at a price where they are comfortable with,
Yes.
you know? So this is what we call the quantity of demand chart. Then this is the actual demand chart. You can see that sometimes if the price is low, the quantity demanded will be high. You get. And if the
Yes.
price is high, the quantity demanded will be low. Now this is
Yes.
close to zero. This is where the zero is. Then this is one, two, three. So at a higher price, which is price one, the quantity demanded will be low. And when the price
Yes.
is low, the quantity demanded will be high.
Zai.
Yeah. So that's simply uh, how this thing works. Now moving on, I don't know why I have this chart here. Just a minute, let me remove this. Okay, I can't erase. I don't know why.
Hmm.
I think it's frozen. Okay, let's just move on.
Yes.
Let's just move on. I think they'll go with time.
It's
So
fine.
currency demand refers to the desire and willingness. Well, I know why they refuse to go. I'm using the
Currency demand.
I'm using the annotation of Zoom instead of that's why. So currency demand refers to the desire and willingness of traders to hold a particular currency. That's
Okay.
currency demand. So what influences the demand of a currency? It's just the economic strength. You can see how the dollar has economic strength, and so they are able, people they have that willingness to hold it. So also the interest rate,
Yeah.
you can see how they affect the price. When interest rates are cut, Donald Trump has been asking the Fed to cut interest rates. Then geopolitical stability and investor sentiment. These are one of the things that
Yeah.
influence the demand. So increase in demand for a currency leads to an appreciation or increase in value of that currency relative to others. For example, if the demand of the US
Yeah.
increases due to high interest rates, the US may
Yeah.
strengthen, the dollar may strengthen, you know, against other currencies like the euro. We see this on the chart. Yeah. So decrease in demand leads to a decrease in value for the currency. So a low demand can result into economic weakness because people are no longer using, because they're no longer demanding for it. And of course, funny economic data. Yeah. So all these things affect currencies and economies directly. So moving on, we have then supply. It refers to the quantity of goods a supplier offers to consumers. Like, how is he able to produce more and supply the market? Yeah. So what is his willingness to supply at a given price? So this is the chart. If the price is high, let me say at 30, the supplier will supply more because he wants to make good profits. And if the price is low, he may supply less. If it's low compared to his production cost, I hope I haven't lost you.
That's fine.
Okay. So moving on, we have currency demand, the availability of currency in the market. So if the currency is over flooding into the market, it leads to depreciation of that currency. That's why if they say they are printing more notes, depreciation is happening.
Okay.
So in China, in Japan, there's a time they used quantitative easing to weaken.
Mm.
It weakened the economy. I think that was early 2000s or late 19th. They used something called quantitative easing. There is even a
They
strategy.
printed more money.
Yes, there is a strategy in trading.
They printed more notes.
They printed more notes and they didn't have they were giving out loans. There is a strategy. There is a strategy called one Mrs. Watanabe. It's from Japan. It talks about the history of it, and in that history, it has something called quantitative easing, where it was a woman who discovered how to use it to her advantage, something like that. So traders took on the same thing and they use it in currency trading nowadays. So decrease in supply leads to appreciation. So if the central bank decides to reduce the money supply, it will strengthen the economy. And that's what Uganda is doing now. You can see the Uganda shillings is performing the best in Africa. And if you go to Binance P2P, you can see it's close to 3,500, you know.
Mm.
So then we have equilibrium exchange rate. So in the Forex markets, it's where the quantity of the currency demanded equals to the quantity supplied, which is rare. Yeah. Yeah. So that's it. So what are the trading implications of demand and supply? Technical analysis. We use charts to identify key levels of demand and supply zones. These supply zones represent areas where buying or selling pressure is concentrated. I'm going to show you the easy one, then there are other strategies around it. Then also in
Mm.
fundamental analysis, we analyze economic indicators like employment data,
Yes.
inflation reports, and stuff like that. Then there is market sentiment. Of course, this is the third leg of a stool of trading, whereby we see traders' reviews, like their view on economic conditions and geopolitical events that directly affect demand, currency demand, and supply. So moving on,
Yes.
we have, of course, micro, macro and micro influences. Now, macro is worldwide, like GBP, inflation rates, the same. Then micro, yeah, industry-specific factors like exports, imports, corporate earnings. These ones also affect demand and supply in their own way. But most times people are going to look at these ones because these ones tend to affect also this one. Moving on, there is elasticity of it. Price elasticity,
Yes.
demand, it measures how sensitive currency demand is to changes in price levels. For example, if the currency's value changes due to interest rate adjustments, we as traders, we tend to assess how much demand will adjust in response. Yeah. Now that when you look at interest,
Yes.
anyway, we shall look at fundamental analysis in depth and I'll show you where all this comes in. Now, this elasticity of supply measures how sensitive currency supply is to changes in exchange rate. Yeah. Shall look at them deep. So I'll
Yeah.
go to the chart and I show you how physically.
Mm.
Just a minute. So we are going to go directly. Can you see the chart?
Loading, eh?
All right. So on the chart, when we are trading, there is a way we do it. Yeah.
Yeah.
Right. Floating. So on the chart, we have demand and supply zones. Now, of course, we shall look at other strategies of demand and supply, but I'm going to show you the basic ones. So the best way to determine a price concentration, we have a strategy to it. First of all, what you should know is we're going to draw out two boxes. We come here at shapes. We're going to
Okay.
put a rectangle up here. And we shall draw a rectangle down here. So what happens? There are two zones. We have what we call supply, which is up here, and demand, which is always down.
Yes.
You
It's
get,
down.
yeah. So remember, it's the price is down, then this one, the price is up. You get.
Yeah.
The way the market moves is that two in here, the path. So the way we trade them is when the market comes, let me say it's moving up, it touches here, it goes up. So this part here is what we call a demand area because the prices are filled as low and there are so many people willing to buy from a low price, which we call a demand zone. So when people buy, the prices rise till they reach a level where people feel it's so expensive and they are willing to take out profits. And so many are not willing to buy from an expensive price, which leads to people selling what they have, you know. So, because they feel they've reached their level of greed, so they sell out and the price drops down to another demand zone. Are you still on?
Yes, I'm still on.
So, up here is what we call a supply zone, and down here we call this a demand zone because people are willing to buy at a cheaper price and they are ready to take out.
So you say down is demand zone.
Yeah, then this is,
So up is the supply zone.
yes, this is supply, this is demand. So basically, when you come to the chart, it's like real life.
So
Yeah.
so it means demand is almost the same as support, right? Isn't it?
Yes. That's
And
to some
supply zone
degree.
is almost the same as it.
To some
Sorry?
degree, to some degree, when we are just starting to define them, that's what you can say, you know. So for example,
Instant.
if the market is going up here like this, if the market is going up here,
Yeah.
which is a point, we can mark it out.
You can mark.
We can mark this upper point as a supply zone
Yes.
because we feel there is concentration. And down below, we shall get a demand zone. Now I'm going to show you one
Demand
strategy.
zone.
This is just the basic strategy of demand and supply.
Mm.
So it looks like support and resistance, but I want you to take one thing. The market moved up and found something. It can, I've not gone to the past because you may find that there is another supply zone, but there's a reason it stopped here and left concentration. You get. So when the market moves till up here, it leaves the supply zone. And remember, from here to up here, it had left a demand zone down here. So what does it do? It comes back to that demand zone, picks new orders, people willing to buy again from those prices, goes up, it can find a new supply zone. It can find a new supply zone and touch it again and drop again to a demand zone like that. So that now there are strategies to it.
Yes.
The way we do it is we look for impact, like very strong momentum in the market. And how do we find that very strong momentum? Now, this is one of the few strategies of demand and supply. We look out for three momentum candles. Or a very big momentum candle. It depends on the time frame. You get? It depends on the time frame. Yeah. So some people either take in the 1 hour 15, it just depends on your strategy. Yeah. So
Yeah.
let's mark out the demand zone. We look at momentum candles. For example, here you see how the market is going up. You can look for three, or this is just, you can count it as one because there is a lot of momentum. So you mark out the last candle that was opposite. Now, for example, if this is going up, we mark out the last bearish candle, which is this red one. So you can see that you mark out the highest point to the lowest point and you stretch it and you stretch it. You get.
Yeah.
Are you still on?
Yes, I'm on.
You're far from your
Yes.
phone. So you stretch
No,
it.
maybe I'm putting on April. So I don't know.
Yeah, you've put on headphones.
Can you hear me? Yeah.
So
Can you hear me?
we mark out the momentum. Now you see here how there
Yes.
is this large momentum to the downside, almost
Yes.
taking on all these candles. We mark out the last bullish candle, which is the green one, the one which is opposite. And this
Yes.
is our new demand. This is just a strategy. So if I'm to delete this one and get and see the market drop like this, I wait for momentum, like this one here, here, this one. I see 1, 2, 3 momentum. So I mark out
Yes.
this last bearish candle, top to bottom, and I stretch it out. And you can see that the market, when it came back to this point, it just reversed to my direction. I look for momentum. So even though I delete this one and I see another one, which is there's a lot of momentum here, I can mark out this point and this point, then I stretch it out and still wait for the market to come back here and I buy the market. So even this side,
Yeah.
you can do the same this side. You see here, there is momentum.
Yeah.
One, two, three. You mark out this candle here, this last green one. You mark it out
Yeah.
like, and you can see when the market came back, phone supply, and it's now planning to reverse. I would be trying to short it now. You get. So that's what we do. Now, this current one, you can mark it out like this, here, like this. It's very tiny. So that when the market comes back here, you know what to do. But we don't um draw them in isolation. We don't use them in isolation. You get, we
Yeah.
add other things. We add other things like trading with the trend. We don't just say buy and sell, buy and sell. Most times we get the ones that are in line with the trend.
Yeah.
We get the ones that are in line with the trend. They're the ones we use when we are going with the market. We don't just trade because we have found a demand zone. We add them with psychological levels and stuff like that, you know. We add them with psychological levels and a few more. So you always look for momentum. Always just look for momentum. Identify where the momentum is and mark it out. Yeah. So that's basically just how we trade demand and supply zones. We add them to the other reasons. Now, there are other strategies around that, but I think we shall look at them on Sunday. I think we need to
Okay.
change that day because the way you're always busy.
Yeah. Sunday is always like um, from, 8. I don't went from 8. I don't know if I'm now here with the family.
Mm.
So right now we go to class around that time. That time the family, the whole family is around you all.
Yeah. We shall need to get another day.
That on the weekdays like this, people are going to school, another are going to work, so I'm a bit free.
Mm.
But in the evening, they're back.
I think shall be
So
doing mornings.
yeah, around this time it's okay. Around 11,
So, okay.
around 11, 10.
Now that's
Yeah,
what we looked at is one of the best thing to do is trade it with the trend. Don't go opposite because opposite is
exactly.
you have to trade it with where the market is going. Like if it's, of course, the other strategies that I'll show you, but this is just the basic. It's not even basic. Like it's the one I use most times. For example, if the market is going up like this, most times it's better you trade with it. You identify you identify levels of demand where it's likely to pull back to like, and you just be taking profit from what? You be taking from profit from, of course, they can be also from the middle. You be taking profits from such supply zones up here, and you just enter from demand zones. That's how we trade. We don't just buy to sell, no. We trade with the trend because we don't want to be in the mix of buying and selling. No, doesn't make sense.
Okay.
Yeah, so that's it.
So what about this graph down here? What is it meant?
This one here,
Showing you the the what
this
is
this
it?
this bars.
Yeah, those bars.
Now these are volume indicators. We are going to start looking at indicators also. Shall look at different indicators, moving averages, what and stuff like that. I just wanted us to utilize the
I
tools.
also help you in there.
Yeah,
volume,
but
right?
you can remove them. You just have to come here. You see where there is volume, vol. You can hide them,
Yes.
you can leave them, or you can delete them
Now,
forever.
what I'm
Mm.
saying,
Mm.
like the other one, it also shows the volume of both,
I
something like
can't
that.
hear you. Can't
I'm
hear.
saying, does it show the volume of trade?
The
Can
volume
you
of
hear me? Okay. Let it make a note. Okay.
okay.
You can hear me now, eh?
Yes. Yes.
Yes, I've removed the headphones.
Mm.
What I'm saying, that volume, the one you have removed, the small graph down there,
Yeah.
does it relate also to like the demand, like where maybe you have seen very many of them, or where they are very long? It means the demand is high there.
That is, yeah, that is
Something
the
like that.
there are strategies that you can use with this indicator here. Some people use them using the moving averages and stuff like that, but they help it identify the volume in that specific area, the concentration. Yeah.
Yes.
They help you identify that concentration. Yeah. So you can see that here there's some volume of shots. It's still
Like that's bearish. This red one, it shows the highest, the tallest almost. So it means there was a lot of supply around that time.
yeah, yeah. You can use it to you can develop a strategy that uses it. Yeah.
Okay.
There are strategies for everything on this. You have to just find one that works because there are so many.
Okay.
So that